Hey everybody, Economic Ninja here. I'm so grateful to be with Tom Wheelright. Tom has been writing books on tax preparedness, tax advantages, and all around tax information. And while many of you might have your eyes rolling in the back of your head right now because the last thing you want to do is talk about taxes, I think it's incredibly important because it is one way of not only saving money, but I look at it as putting money in my pocket. I'm making money. So Tom, thank you so much for coming on the Economic Ninja Show.
Just happy to be here with you. Absolutely. I love putting money in my pocket. So that's why I love taxes so much.
That's right. It sounds funny. A lot of people don't think about that. So some proof. This is my copy of Tax-Free Wealth. I actually bought this many years ago. I don't want to age myself, but I've read it multiple times. It's one of those books that I keep going back to reference. So I thank you so much for writing books like this.
No, absolutely. It's my pleasure.
Awesome. All right. So we're going to get into some standard, really basic tax questions. But I know these are questions that people ask me a lot on my channel. So I wanted to start breaking them down. So one question is, how important is it to tax plan? I don't think a lot of people understand the difference between filing your taxes and planning for taxes.
Well, planning for taxes gives you a choice, right? So you get to choose. Let's put it this way. We're all partners with the government. Right. Anytime you get a paycheck and you look at, okay, who's this FICA guy? He's taking all this money out of my paycheck. Who's withholding? What's all that about? We know we're a partner with the government. So we have a choice. And our choice is we can be a silent partner or we can be an active partner. If we do tax planning, we're an active partner. If we just file a tax return, we're a silent partner. The government doesn't care which one we do, but they do allow us the opportunity to do tax planning to legally reduce our taxes.
I love actually the way you put it, because like you said, do you want to be vocal and actually get your piece of the partnership, or do you want to just sit back and let your partner take all the credit and the money? Awesome. Well, how about this? Do people leave money on the table, and how do they when they don't take advantage of the tax code?
So we have an elevator pitch at Wealthability, and we say that for an entrepreneur investor, give us 3 months and chances are we can reduce your taxes permanently by 10 to 40%. So the reason we say that is because it always happens. It's not sometimes. It is always, every entrepreneur investor is leaving 10 to 40% of their tax bill on the table, and it could come off with some good tax planning.
That is incredible. So between 10 and 40%, usually people, the first question they ask when I start talking to them about tax planning is, well, do I need to own a business to start saving money in taxes? Or just, if I'm an employee, can I do something to save in taxes?
If you're an employee, max out your 401k. If that's all you're going to do is spend your money and put, maybe save some money, you're going to be taxed on most of your money. The reason is the tax law in the US right now is really a consumption tax. You're only taxed on money you either save or spend. You're not taxed on money you invest. Yeah. So you can, your choices are, you can be the silent partner, be an employee, don't just spend your money and pay your taxes. Or you can be the active partner doing things the government wants you to do, like start a business, like invest in real estate, like other types of investing. If there are things that the government wants to have happen, chances are there's a tax benefit to go alongside it.
Excellent. Awesome. I love that, because so many people need options, and the tax code offers tons of options for people. So here's another question. If you own real estate, should you be paying taxes?
Well, if you can become really good at owning real estate, there's absolutely no reason you should pay taxes. When I wrote Tax-Free Wealth, we didn't have all the tax benefits we have now for real estate, but we had enough that you could literally build tax-free wealth. And I've had clients for many years who have built tax-free wealth. A lot of them do it through real estate. And the reason is the government wants housing built, wants commercial buildings, it wants industrial buildings. All of these things function to make the economy run and to provide housing. And so in exchange, the government provides tax benefits, and to the point where you could literally get to zero, paying zero taxes while still making tons of money.
Yeah, and that's a great point. Everything from opportunity zones, taking advantage of those, to even different types of tax credits. there's all kinds of different ways that even the average real estate investor doesn't realize it. So I like the way you said it. If you invest in real estate right, that has to do with a lot of who you put yourself around, what books you're reading, things like that.
Yeah, absolutely.
Awesome. All right. And then I got one more question. I wanted to keep this segment pretty short, but are there any tax benefits to having an entity such as a corporation or an LLC if you own real estate or a business? Anything that's different from, like sole proprietorship?
This is an interesting question because I think there's a lot of misinformation on this. First of all, your deductions don't change because you have an entity. I've actually seen advisors who I think should lose their license, frankly, who suggest that if you put your assets in a corporation, you get different deductions, substantially different deductions than if you own them individually. In the end, and the response to that is clearly no. I mean, there are a few differences between corporations and sole proprietorships, but very few. The biggest difference is Social Security tax. So we have two primary taxes that we pay on our federal income tax return. We pay income tax and we pay Social Security tax. Yep. And if we're a business owner and we're a sole proprietor, then we're going to pay Social Security tax on all of our net business income. All of our income we're going to pay tax on. If we form, for example, as an LLC tax as an S corporation or a C corporation, we're only going to pay Social Security tax on wages that we take. So there are some significant advantages, also legal advantages, obviously, yes. Legal protection to having an entity. And I'm a big fan of entities. Actually, I'll tell you, I think the single biggest advantage to using an entity is that it forces you to be a better business owner and a better investor because you have to have a full set of accounting records. And because of that, by the way, you have a much lower chance of being audited. Somebody as a sole proprietor has a 5 times or greater chance of being audited than somebody who's formed in an S corporation partnership or a C corporation.
Oh, that's awesome. And I know I wanted that to be the last question, but this is something that a lot of people can't wrap their minds around. If you could explain it, that'd be great. Because people talk about opening an S corporation. And I've tried to explain to them the difference between an S election and an S corporation. Could you explain that a little bit?
Well, the challenge is that we have legal entities and we have tax entities. And a corporation is a legal entity. It's not necessarily a tax entity. A corporation is a legal entity. A limited liability company is a legal entity. Yes. But an S corporation is just an election we make on either a corporation or a limited liability company to have it be taxed a certain way. And the way it's taxed is instead of paying tax at the entity level, and then again when the money is distributed, we pay tax on 100% of the income that's earned individually, but we never pay tax twice.
Yeah, see, that's awesome. And your books, if I remember right, even Tax-Free Wealth gives a lot of different examples of how you could save taxes using different entity structures, correct?
Oh, for sure. When we start working with a client, like I said, it takes us about 3 months to get through a tax strategy. One of the very first things we do from a tax standpoint is we look at the entities and we make sure that really from an entity standpoint, you will want to look at 3 different things. One is the tax side of it, but you also want, as I mentioned, the legal side, but you also want to look at your long-term planning. So your estate planning, because all of those 3 affect each other. And so it's a big mistake to look at just one piece of your tax planning. You really need to look at it holistically and look very long-term.
Awesome. And just so you know, for my audience, I'm not receiving any kind of compensation for this interview. I brought Tom on. Actually, he was gracious enough to come onto the channel because I think I've been reading books like this. I really dug in deep, and this isn't a commercial for the Rich Dad Poor Dad series of books, but there are so many amazing people that write these books, and it's such a depth of knowledge. I really highly suggest you go out and look into some of these books. Now, with that being said, Tom, it's one thing to say, hey, how can people find you on the internet? But are there any programs that you have to help? And again, actually, Tom doesn't even know I'm asking this, that could help people in deciding, hey, I own a business, I'm a sole proprietor. What kind of tax benefits are you talking about? When you said there's a few differences, but the biggest difference is the self-employment tax, how could they reach out to you? Do you have any programs that could actually help them make those decisions?
Yeah, for sure. What we've been doing the last few years is my big project right now is we've built a network of CPA firms around the country and in Canada. And we have over 50 member firms now. And so if you go to wealthability.com, just schedule a call. We're happy to go through your situation and determine, is there some way that we could help you? Is there, some questions we could answer? There's lots of information on wealthability.com. And also we have education programs as well. So education is a big part from our standpoint of becoming a better investor and becoming a better business owner. It's not just about getting specific advice or transactional advice. It's very much about you becoming educated, because when you do, you actually become a better client and a better investor.
Awesome. That's awesome. So guys, I'm going to be putting that website up on either on the screen or in the description below so that you guys can get some more information for that. Tom, thank you so much for meeting with me. Do you have any final words, or are we going to wrap this bad boy up?
No, I love it. I love your focus on education, because that is, and reading these books, I mean, I read all the time. My friend Robert Kiyosaki, Rich Dad Poor Dad fame, reads all the time, and he actually gets the rest of the advisors to read all the time. We're always reading new things, always learning new stuff. So thank you for providing financial education. Really appreciate it.
It's absolutely my pleasure. To say that I would, if you had asked me a couple of years ago if I was talking with you or getting to know people like Mr. Kiyosaki, I would have said you're crazy, but this is so awesome. So with that being said, guys, the Economic Ninja is out.